Hey, what's going on, guys? It's Henry back with another video, and I'm going to talk about small account strategies. I know so many people out there are trying to grow their small portfolios, and today we will do exactly that by turning $8 into $42 in 1 week. Then I'll show you how to scale up and turn $100 into a couple hundred quickly. So basically, we will talk about how to 5x your money quickly with a small portfolio. I'm going to be discussing 3 different strategies today, and I think you're going to be pleasantly surprised with what I'm going to share with you. Also, check out the free email newsletter. I share option trading tips and insights weekly for free. And it also doesn't hurt to hit that like button and subscribe. I really appreciate that. Something I will discuss is closing positions. A lot of students have asked me how and when to do it, so I will cover that in this video. I need you to make it to the end of this video because otherwise you're leaving money on the table by being more susceptible to making mistakes. We will also look at placing stop losses and limit sell orders. It's very important if you want to be a profitable trader. Option traders need to have every tool and utilize as many as possible because the best traders make millions by getting in and out profitably by being accurate. Too many people think that you also need a large portfolio to make a lot of money. I want to debunk that myth because it's actually a lie. Of course, you can take a smaller portfolio and build it up. Even the smallest portfolio can be built into a medium portfolio or even a larger portfolio. It just takes more time, but you can take a shortcut if you have skill, knowledge of alternative option strategies that I'll cover in this video and my small option playlist. You need to also manage your losses and understand risk. The combination of these things will allow you to grow a small portfolio because it's not like you need to start with a 7-figure portfolio. I started with $2,000 back in college and built up very slowly through persistence. Now, I wish I had a mentor so I could avoid mistakes, but that's what my mission is now. I'll show you 3 trades you can copy the mindset, the framework, and use these ideas as models to duplicate for yourself on the same tickers or others. Here's the first trade. This trade is going to be on Palantir. The total cost is $8 and the total return is $42. Let me walk you through this trade. But first, I want to show you the technicals. So I'm going to use Yahoo Finance. Yahoo Finance is fantastic, and I use a few different indicators to watch the stock. First of all, I do look at the RSI. I want to make sure that the RSI is pretty low. If it's pretty high, that means that the stock is expensive. Here, the stock is pretty cheap because it's 34. Okay, I'm going to go to a 3-month view. This stock right now is at the bottom of the Bollinger Band. That means the stock is very cheap. It has sold off from this levels of about $14.63, and that was its peak back on April 4th. Now, just a little under a month, this stock is trading for around $10.40. But I believe the sell-off isn't going to continue. That's because the first reason, it's at the bottom of its Bollinger Band. The second reason is this purple line right here is the moving average. Now, the moving average for Palantir is around $12 per share. This stock is currently sitting at $10.40, and as you can see here, investors tried to buy the stock. They tried to get back in and show a bullish trend. However, the stock ended up selling off a little bit more. Now the stock is at its level where it hasn't really been since March 14th. And before March 14th, if we go back to this period right here, February 23rd, again, we saw support around $10.43. Right now, I don't see any reason for the stock to sell off further because we have great support 1, 2 days here and a 3rd day. Now we're currently sitting at a 4th day and maybe even a 5th day of around this lowest level, okay? So this stock has a very low likelihood of going down any lower. I'm also bullish on the company long term, but that's besides the point because what I'm going to show you is a short-term trade where you can turn $8 into $42. Now, the strategy that I'm going to show you is going to rely on Palantir staying pretty stable. This is a very secure range because the stock has been trading within this range over a couple weeks now. Now, this trade is going to expire on May 6th, but if you watch this in the future, just repeat this strategy by using a 1-week option. I like 1-week options because a stock can't do a whole lot. So the strikes that I'm picking is a $10 strike, $10.5, and $11 strike. I'm going to show you how I construct this trade from scratch. But real quick, you'll see right here that I'm selling 2 contracts for each 1 contract when I'm buying. That's because I want to have an equal amount of sells for each buy. I want to make this a balanced trade. So I'm selling the $10.5 call option. Now I'm going to get rid of this and show you this trade from scratch. The most important thing is I'm selling the $10.5 call option. That's the strike price that I'm picking. The reason I'm picking this strike price is because it's the current strike price for Palantir at the moment. And as I don't see Palantir really falling that much more, nor do I really see it rising because there's not going to be a short-term catalyst that I can see in the front view mirror. That's the reason why I think it's going to stay around 10.5. Now it may jump up a little bit higher or a little bit lower. I'll show you how to manage that that trade shortly. So the first thing I want to do is I want to click sell call option. This is your anchor point. Wherever you're selling a call option is going to be the area that you expect the stock to end at. For me, again, I expect a 10.5 level. Let's say for whatever reason, you thought it would be $11. You can always sell the $11 strike. But for this example, let's use 10.5. I'm going to click here and sell the 10.5 strike. This is to start the position, okay? Now, the next thing I'm going to do is I'm going to click buy call option. I'm going to want to buy a call option under the strike that I picked. So under this 10.5 strike, I'm going to pick the $10 strike. Now, I also want to pick a strike higher than the middle strike or the anchor point that I picked as well, which is going to be the $11 strike. Okay, I'm going to open this up. Now, this is going to say a custom order. If you're using Robinhood, just follow these steps. If you're using a different platform, that's fine as well. All you have to do is enter a custom unique size ratio, okay? This unique ratio isn't really that unique. All you need is an equal amount of sells for each buy, as I mentioned before. So instead of this costing you $53 and having a payoff chart like this is not balanced. You want to have a 2 here. That way you're selling 2 contracts and you're also buying 2 in total. Now you can see right here, you can turn $8 into $42. And basically the premise here is that Palantir stays within this range, okay? So in this period, as long as Palantir stays between this range, so the top of the range would be $10.92, the bottom of the range would be $10.08. As long as Palantir stays within this range, a lot of things can happen. Let me explain. So at expiration, if it ends right here, obviously you'll make your total profit of $42. Now, the beautiful thing is you don't have to hold this position until expiration. Let's say that you open this position up on Monday, and if Palantir stays within this range by Tuesday or Wednesday or even Thursday, this option is going to increase in value. That's because the probability that this option will expire in this range is increasing. And option traders know this. So these options that you're buying will decay. However, this option, this anchor point, will decay much faster. And because you've collected $45 here 2 times, you're really going to collect a lot of this money right here as this option decays if Palantir or the stock that you picked stays within this range. So even if the range goes down a little bit and the stock ends up ending at $10.29, you can see right there that your expected profit is over $20 on $8. You'll still double your money. Obviously, you need this trade to go as close or stay right here at $10.50. But even if it wobbles around, but a few days pass, you're going to end up making money because you're selling theta. You're selling time premium. Every time you sell options, you're making money because those options are decaying. Now, you're betting very heavily on a certain strike. That's also why you're getting rewarded so much. Closing this position isn't the easiest, but you can get it filled and you can make a profit even if you don't close it for the exact price that you want. So a lot of people will try to close this at a $30 profit, but you may only get $22 or $24, for example, because you're playing with the bid-ask spread. This is not an easy position to close. However, there's so many benefits to opening a position like this. This has been really profitable for myself and a lot of my students. Now, again, use this on a stock that you believe in. Use this on a stock that you have a lot of conviction on and a stock that you follow closely, because you're going to be right more often than you're wrong. If you use a strategy like this, you can make a lot of money. You don't have to turn $8 into $50 each time. The total payoff here is $50. The reason why it says $42 is because you're paying 8. So $50 minus 8 is 42. However, if you close this position for $24, which in my opinion, you should set this as a goal. When you open up the position, have an exit point in mind. So you always want to have a plan. Whenever you get into a trade for $8 or whatever amount it is, you want to have an exit plan. So for me, it would be $24 or even $32 on this trade right here. And as soon as a couple days pass, I'd look to close this position on a Wednesday or a Thursday. I wouldn't necessarily wait until the last day unless Palantir stock stays right at this very peak around $10.50. All right, so I'm going to move to the next position. But again, remember, I'm not a financial advisor. Just apply these principles and these models of framework use on your own ticker symbols. Now, the next position we're going to talk about is Amazon. Amazon has sold off a lot. Now, this usually happens during earnings seasons. Right after stock reports earnings and ends up falling, I have a fantastic strategy for you to use. This is a moderately bullish strategy, but this is a fantastic strategy overall for many different market environments. Whenever a stock basically sells off, it's unlikely to continue selling off unless it's a really bad stock. A typical blue chip company will sell off and then it'll have some recovery. We didn't see that with Netflix. Netflix continued to sell off, but many other stocks will have a rebound. So if you believe a stock is ready to rebound, then use the strategy that I'm going to teach you right here. So right here, as you will see, you can turn $580, or really you're risking $580 to make a total of $2,420. Or essentially you're turning $500 into $2,500, which is a 5x on your money, okay? You're basically having a 5x return, and this is what the chart looks like. So if Amazon recovers just a little bit, you're going to see a really big profit. You're going to see around $2,420 worth of profit profit on this position, okay? That's a 5x on your money. But even if things don't really work out in your favor and Amazon ends up going up a lot more, or whatever stock that you pick, you actually still have a bottom of $420 that you can make, which is almost a double on your money. It's basically turning $580 into $1,000. So you're almost doubling your money here. The only thing that can really go wrong is if this position goes down. However, you'll notice right here that this is a very powerful position, because even if the stock goes down a little bit, you're still in the green. You can still make $700 even if the stock slightly pulls back, okay? It would really have to pull back a lot, down to 24.85, which would be a 52-week low, an area for Amazon that is very unlikely. And even if it does end up falling down, your risk to return on this trade is very favorable. You're making so much money on the upside, right? You have a potential of 5xing your money, or even just almost doubling your money, okay? This area right here though is obviously the most profitable area that you hope the stock ends, but even right here, you're ended off really well. However, on the downside, you're really risking just $580 and you have such a big profit area, okay? Your profit area is immensely huge, okay? Very, very large and very, very likely, because Amazon, based on the technicals, let's just take a look at the technicals I'm going to show you right now. This stock has sold off a lot, okay? There's many reasons that it has sold off. Amazon isn't growing as fast as it used to, but right here you can see that the moving average is very stable. This moving average is stable over $3,000, okay? And has been over $3,000 for quite some time. Even if I go to the 1-year chart right here, it's been over $3,000. In fact, the entire time. It hasn't even been below $300 until very recently. So if I click the 3-month chart, so right here, it really dipped below this moving average on 420, which is just a couple weeks ago. In fact, it's less than a couple weeks. And this stock has been in a spiral downwards, completely down for a while, for a few days now. And for me, it's a sign of strength at this point, because everyone who was a bear already got out. In fact, this red line right here, this is a chart of how much volume was sold. I mean, so many people got out of the stock, and now I believe this stock is ready to recover. If you also look at the RSI, it's at 29, it's below 30. This is very oversold territory on many different levels, okay? Amazon has gone down below the Bollinger Band, it's below the moving average, and the RSI is a very good indicator that a lot of people have gotten out, and this is a great opportunity to get in, okay? So I really think that Amazon is going to recover pretty quickly, and that's why I'm making this option trade expiring on May 6th. Now, very unlikely that the stock goes down, so your risk here is defined. However, you have variable amounts that you can make, okay? On the very highest end, over $2,400. But even if the stock ends up going up a lot, your profit area is basically infinity, from about $2,500 all the way back up to $3,000. I don't think Amazon will go to $3,000, but you have this whole area to make money. And for Amazon to go down, it's unlikely, because Amazon is such a stable company. Now I want to show you this trade, this third one. It's really important because this is similar to the first trade that I showed you, but I want you to get a little bit more practice here, because you really need to understand how this option trading strategy works if you want to grow your portfolio fast. So the first strategy that I talked about is basically called a Christmas tree, okay? So what I'm going to do is I'm going to open up another one. Now let's say that in the first example I was giving you, I was betting at a 10.5 strike. Now I'm going to bet on $11. This means that I think Palantir stock will go up a little bit, which is completely possible. I do have a biased bullish thesis on Palantir. So what I'm going to do now is I'm going to open up a little bit of a wider trade, and I'm going to bet at $11. So I'm going to sell the $11 strike. But first, because this biased bullish thesis may take a little bit longer to play out, instead of choosing a 1-week option, I'm going to choose a 3-week option. I'm going to pick May 20 for this example. So now I'm going to sell the 11 strike. And again, remember, this is my anchor point. Now I'm going to buy a call option. I'm going to buy the 10, and I'm also going to buy the 12, all right? So this is a nice $100 spread from 11 to 12, and a $100 spread from 11 to 10. Again, I'm going to create a custom order. Instead of a normal order, I'm going to create a custom one where each sell equals the amount of buys. So 2 sells and 2 buys. Now you see that my total cost is $16, and I can turn that into a total of $100. This is an even better trade, and I'm still in the profit area. You can see right here that even if the stock stands still, I'll make some money. But now I've added a bullish thesis to the stock. So if it ends up going up just a little bit, let's say it ends at $11 per share, I'm going to turn $16 into $100. This is also going to give me $84 worth of profit. Now it depends which strike you want to pick, but this is basically how you open up a position. Make sure to use this strategy on a stock that you believe in and understand, and pick the right strike for you. You may also set a limit sell order for this position to go up 3, 4, or 5x. Say you want to turn $16 into $50, you can set a limit sell order at $50. That way you don't even have to manage this position. It will automatically sell off at $50 for you. If you want to follow along with all my trades and grow your portfolio quickly, make sure to check out that first link in the description for my private Discord community with coaching. Also, again, I have that free email list that you can join. Thanks for watching. watching. I appreciate you liking the video, and I'll see you in the next one.